Time to talk about source metrics. So the original tracking spreadsheet had a simple page like this, and it was simple yet powerful, and we've added in version 2.0 a much more elegant solution. So the original source metrics tab looks just like this. You've got all your sources on the left. You've got your units listed. We can see how many units have been sold. For example, we'll look at the Nebraska row. So we've listed 162, sold 124, 77% sold. Total list price, average sales rank if you track that. Then we can see the total sales from that batch. Our inventory cost, about $1.36, $136 for 162. So an average inventory cost of a little bit under $1. Inbound shipping cost to get these to Amazon. We can see how much Amazon took. We're making their stock price go up, hopefully just a little bit. Any disposal fees from that particular batch. And then at the end of the day, what really matters is, did you make any profit? If they're negative, fortunately none of these are, they'll be in red with parentheses around them. But you can see the profit, so $600 off of inventory cost of $136, so the return on investment is 445%. Not bad. Again, you'll see very good returns if you're doing the book game properly. So this is just a nice overall view. If you want to sort by anything, you can actually come in here and let's say, hey, what's my highest profit? If you just want to scroll down, you can easily see what that is, but you can right-click in the profit area, say sort, and then say largest to smallest, and it'll sort it for you. We can come over here and see the Grace Library was our #1 source of profit. Carlin is #2, Steak Trip #3, so on and so forth. So that's the top-down view. Let's go over here to the source dashboard. I'm very, very pleased with how this turned out. Again, so rather than just a 30,000-foot view, we wanted to zoom in to, 500-foot view and get a good picture of what's happening. So the way this is set up, we got a drop-down menu here, and it's going to actually feed off of the sources based on that source metrics tab. Now, right now, they're not in alphabetical order, so it may be hard if you have several hundred sources to find the one you're looking for. So no problem. We can come back over to source metrics. We can either right-click here and say sort alphabetically A to Z, or you can click this little arrow, and it's going to pop up on another screen for me. You're going to say sort by source, and it's just going to automatically sort, in this case, descending. We're going to go ascending, so it's alphabetical. This is going to make our job much easier when we find our sources. So come back over to the source dashboard, click the drop-down menu. Now we're in alphabetical order, so it's very easy to see what's going on. Let's go ahead. For those that follow me on the blog, you saw we did a steak trip last November. So my wife and I went to Columbia, Missouri. That's 2 states over from Colorado. We drove through, let's see if I can get my geography accurate. Drove through Kansas, went to Missouri. We went down to Arkansas, went back over to Oklahoma, up back through Kansas and back to Colorado. All in all, it was a 5 or 6 day trip. Got to see some good college buddies along the way, ate some great food, spent a wonderful week with my wife, and we ended up buying a lot of books to boot, which was awesome. So here's how this shakes out. The way this chart is set up, remember, if you're set to automatic, then the chart automatically updates. If this doesn't update after you change your source, then you can come up here and click Calculate Sheet. Now, over here on the right, it's going to give you a recommended start date, and it's basically just looking for the first time it saw a sale. So it's going to tell you 11/9/16, so you can plug your date range in here. I usually just work off a monthly level, so 11/1/16. None of the numbers should change. If you started later, then they would change based on what sold during that time frame. We're going to end, this is essentially the end of March. I'm in early April at the time of recording this video, so we're just going to leave it here. Now the chart automatically is set up to show the last 12 months. Now if you're okay with that, that's great. If you're always happy seeing the last 12 months, no problem. If you do want to change that, you can do so by coming up here and saying, I want to start in November of 2016, and it will actually update all the charts below and move them over so that you can see it in order. I would just leave that alone because you can always just see the last 12 months. Control Z will put that back. You can see the nice little formula right here. Now the way this works, it's a really good snapshot. So we can see that for this source, my average rank was 127,000, which is phenomenal. My average book rank is typically closer to 700,000 or 800,000. However, for these books, I wanted to, for whatever reason, we just found better books, or maybe we just were leaving some of the long tails on the shelves. That's not normal for us, so I'm not quite sure, but this is a great average rank for us. Average cost was 77 cents. Our cost of inventory was $5.98, and again, the inventory snapshot's down here. So we bought 778 books on this trip at an average cost of 77 cents. Our total list price was just under 13 grand. So we could spend 600 and hopefully turn it into somewhere close to 13 grand when the dust settles. We won't ever get quite there. That's just where we listed it. Average list price of about $16. Now that's a little bit lower than I like to see, but the average rank was so good that having some cheaper books wasn't the end of the world. And that's just how the dice or the book shook out that trip. Now over down here, we've got it set up by income and expenses. So we can see we've sold 382 books for a total sales price of $5,700 or an average sales price of $15. Now, one thing that's fun to do is compare your list price, $16.45, to your average sale price, and it's a little bit lower. So what's happening there is we've had to go back and reprice some, or for whatever reason, we're selling the cheaper stuff first because it's better rank, and some of our higher priced long tail books will take longer. But over time, you can see what happens. And if you use a repricer, it's actually going to be really intriguing to see, does your average go down or up based on the rules you've set up. Reimbursements, these are when Amazon loses them or they get destroyed in the warehouse. They lost 4 of our books and reimbursed us on average of $6 a piece. That's cool. There's no fees taken out of that, so it's not bad. It's not a great price to get, but it sure beats the 20 or 30 cent reimbursements that we get every once in a while. Refunds, 8 of our 382 books were refunded for a total of 157 or an average of about $20. So go figure, they're refunding more expensive books than they're buying on average. Gross sales here then, after sales, taking out the reimbursement or adding reimbursement, subtracting refunds, about $5,600. Expenses involved with this batch, if you track it, again, using Accelerlist, ScanLister, or the listing spreadsheet, we've got all of our inbound shipping data actually tied to this source, which is really helpful. So we can see we spent $280 to ship these 778 books. Amazon so far has made $2,200 off of us. Good for them. Inventory removal, we were just wrong on some of this, and with the fees that came in February, we dumped a good portion of our inventory, and some of these, even though it was a recent trip, unfortunately didn't make the cut, so they got removed, and that's the cost of removing them. And then the cost of goods sold. Remember, we spent almost $600 on inventory, but we only get to deduct the actual portion that sells or that was disposed. So this actually includes the ones that were disposed as well as the ones that were actually sold and expensed out that way. Gives us total expenses here. So we get a nice little snapshot here across the kind of the lower third of the sheet. We've sold 49% of our inventory, so we're about halfway there. I expect to sell probably 70 to 80%. So we're making good progress for just being a couple months in. Cash flow. So again, this is different than profit. Profit loss is $2,700. It's simply gross sales minus total expenses. Cash flow is going to be a little bit lower because I can't expense my entire cost of inventory right now unless I sold 100% or disposed of 100%. So my cash flow is a little bit lower, but still, we started in November. We're at the end of March, so we're looking at about 5 months. Within 5 months of spending $600, we've cash flowed $2,500, and from a tax perspective, we're going to be paying taxes on about $2,700 minus whatever mileage we have associated with this. So the ROI up to this point in time is great. It's very healthy, 460%. And again, we know we've sold 49%. We listed this many, sold about 380. 4 were adjusted. What this is it's reimbursements minus refunds. So we have 4 books. We just assume that the refunds actually go back to your inventory unless they get reversed later. If the customer doesn't return it, Amazon will actually credit that back to you. It'll actually then be credited as a sale. They'll remove it from the refunds area, and the spreadsheet will manage all of that for you. We've disposed of 93 of the books. Again, we dumped a bunch when the fees came in just because the market wasn't there, and we didn't want to pay any fees on those. Even though they were newer inventory, we just took the opportunity to call some of our poorer purchases. And then we have 300 still in stock. Down below, you'll have some of the eye candy or the charts as well. You can see that you sell a good chunk of your books early on. That's typical of any source. Every time you have a brand new source, you're going to sell a lot early on. And then as you reprice or manage pricing, that may tail off a little bit less drastically than what we have. Average selling price, you can see how that does every month. Units listed versus sold. Again, this was in 1 week period. We listed everything pretty much in that week or the week after. And you can see how the sales then trickle out over that time frame. Our total inventory was as high as it was ever going to get in month 1 and then trickles down as we're selling. Our turn rate, again, in November, it wasn't a full month. 8% is very healthy. 20% is great. And again, you're going to sell a higher rate up front with your batches versus later on down the road. Cumulative cash flow. So what this looks at is the cost of inventory, which is roughly $600, and then the cost of inbound shipping, that actually cost us cash. It came out of our Amazon account, so it's kind of a credit, but it's treated as cash for the spreadsheet sake. So we're actually down almost $900. And then what this blue line is cumulative cash flow. So what this shows us is that we sold a little bit. We sold 8% of the inventory in the first month there, and the cash that we made back, we're still in the hole about $600. So this is a little bit of a cash. I'm not even going to say it's cash intense business. A couple $100 here and there. It might be a lot starting out, but as you grow your business, you shouldn't be able to outspend your ability on books. That's one of the beauties of selling books. Month 2, we'd already broken even. We had a positive cash flow of $600. By month 3, or really 2.5, we were already up to $1,600. By month 4, we had a positive cash flow of well over $2,000. So that's that could pay for your next vacation, pay a couple months of mortgage, again depending on where you are. Inventory snapshot, what this does is shows cumulative items listed. Remember, we listed them all in one fell swoop, and so we haven't listed anything else, so that's stayed the same. And then we see our cumulative units sold. So at some point, we're going to get close to this line over time, hopefully, if we continue to sell. And then a cumulative percent sold. Up to this point, we're at 49%. So again, a lot of really neat metrics, and you can see these for any given batch. So we could do the exact same thing for, let's say, Indie Adventure. Again, this was probably 2 years ago. So this started in September of 15. So this is actually right before I went to a book conference and stayed with some of my friends. Back then, I wasn't tracking rank, so it just shows divided by 0, just an error there. I'll clean that up before you get your hands on this sheet. But no average rank, average costs. Well, actually, the reason it's doing that is because I didn't get my start date. This is a great example. Good job, Caleb. All right, so the recommended start date in this case is September of 15. So we're going to go ahead and plug that in, 9/1/15. Hit enter, and now we're cooking. All right, so our average rank here is closer to my typical average, about 700,000. My average cost of inventory here was a little more expensive, closer to $2 a book, and my average list price was much more healthy at about 25. Then you could run through the data. This is an older data set. Again, we're going to see the last 12 months, so not much data. If you want to see what happened earlier on, we can come back up here, and you can type September, or you can just do September 2015. It's smart enough to figure out the rest. Hit enter, and now we'll see our data from early on. So a lot of these were textbooks. As you can tell, we sold a bunch in September, had decent sales throughout, and then January in textbook season again, we sold another big chunk of the inventory and moved on from there. The data here is still going to show us what happened. So we spent $400 or roughly $500. Cash flow ended up being positive $1,500. Profit and loss was nearly all of that because we've sold almost everything. We're down to only 4 items in stock. Here, there's the inventory removal. You'll see that shows up as 0. I got rid of these during a free period, so there's no costs involved there. So at this point, we've turned or sold 78% of the inventory, but we're pretty much done with this batch. But an overall ROI, not quite as healthy as some of the other sources, but still very nice, 322%. So that's what the spreadsheet can do, and we'll move on to other tabs.